Hello everyone, welcome back to our channel. This video is going to be about CA Final, Self-Paced Online Modules, Set A, Corporate and Economic Laws. In that too, Company Law, we are going to see about the Directors chapter. And whatever the notes I'm using here on the screen, it will be available in the website. The link for the website will be there in the description and in the pinned comment. You can log in into the website and download the notes for free. Now I will tell you how to use the website to download the notes. Now here in the browser you can type Mission CA Virtuals and then you can see the first page which is opened and here you can click on it. Now here if you see, you will see this tab CA Final SPOM free resources. When you go into that, you will be able to find all the SPOM resources. Set A, Set B, Set C, Set D, everything will be there. Instead of scrolling through Telegram channel, word messages and all, you can just come here and then find these resources. Just you have to log in into the website, then you can access the resources for free. So all the YouTube channel links, YouTube videos links, and then the resources PDF, everything will be uploaded here. Inside the Set A folder, it will be available. So you can easily come into this website, log in with your mobile number, and then view the PDF resources. So now we can start the chapter. Now we can see the overview of the topics in chapter number 3, Meetings of Board and its powers. In this chapter, first we are going to see about audit committee, how we are appointing audit committee and all the things related to audit committee in the company stuff we are going to see. Section 177 is talking about the audit committee. Following companies are required to appoint an audit committee. For these companies, mandatorily they should appoint an audit committee. Listed public company and other public companies, if they satisfy any one condition: paid up share capital 10 crore or more, turnover 100 crore or more, outstanding loans exceeding 50 crore, more than 50 crore. If that limit is satisfied, then your company should appoint an audit committee compulsorily. Here they have given it, and then some companies are not required to keep an audit committee, like joint venture, wholly owned subsidiary, and a dormant company. Such companies need not appoint an audit committee. And if you do not fulfill these conditions for 3 years continuously, then also you need not appoint an audit committee. This will be similar to the independent director threshold limit and then the independent director provision. So this you can remember like that. You don't need to remember the exact numbers exactly, but you need to know that there is something called as audit committee, and for that audit committee, listed public companies should compulsorily appoint. Other public companies, they should appoint if the following limit is satisfied. This you have to note here, and these important points you have to highlight. The next thing is composition of an audit committee. In audit committee, who all will be the members? Minimum 3 directors should be there in an audit committee. Minimum 3 directors, and independent directors should be majority persons in the audit committee. The chairperson should be a person with ability to read and understand the financial statements. Majority of the members along with chairperson should be able to read and understand the financial statement. Majority members plus chairperson. Whatever the persons who you are keeping in audit committee, you should disclose it in the board of director report. And then what are the responsibilities of audit committee? They can do the appointment of auditors, they can monitor the effectiveness of audit and other things related to the audit of the company. Financial statement they can examine, auditor's report they can examine, and then they can approve the transaction with related party. Whenever you are doing a transaction with a related party, it should be approved by the audit committee. They can give an omnibus approval also. Omnibus approval means it is a blanket approval with which approval you can do transaction up to a certain limit. Number of transaction you can do. Within 1 year you can do any transaction up to the limit following the conditions. After that approval, without going to the audit committee each time for approval. For that thing only we have created this omnibus approval provision. In that omnibus approval, they will give the criteria for giving the omnibus approval. Maximum value of transaction. Maximum this much only you can do transaction using this omnibus approval. More than that, if you want to do, you can again go to the audit committee and get a fresh approval. Maximum value per transaction. Disclosure which you have to give. When the audit committee will review such transaction which you cannot do using this omnibus approval, these criteria they will keep it based on the following factors, like repetitiveness of the transaction and justification, whether it is required or not, that they will see. And when you are doing related party transaction under section 188, you have to give certain details. Those details will also be mentioned in the omnibus approval. With what and all related party you can do the transaction, what are all the transaction you can do, like that some information will be given. Omnibus approval will be valid for a maximum of 1 year. It will be related to related party transaction up to 1 crore. More than 1 crore you cannot do using the omnibus approval. This 1 crore rupees is the limit per transaction. And then if you are entering into a related party transaction without the approval of audit committee, and then that transaction is not approved by the audit committee within 3 months, not ratified after the transaction, and then that transaction will be voidable at the option of audit committee. Audit committee, if it thinks fit, it may cancel the transaction and then it will recover some amount of loss. Whatever the loss is caused, it will be recovered from the director who did this transaction without getting the approval of audit committee. That director will refund the loss to the company. This is the provision related to audit committee. If there is a transaction which is happening between holding and wholly owned subsidiary, then related party transaction or audit committee approval that will not be required. intercorporate loans and investment, valuation of undertakings, internal financial control, end use of funds through a public offers. These are also will be monitored by the audit committee. Audit committee can call for the comment of auditor for the internal control system, how it is there in the company, scope of audit, observation of auditors. Relating to this, the audit committee can call for the comments from the auditors. The audit committee has the authority to investigate some matters in the company, and it will have all the access to the information in the records of the company, books of accounts, all the records can be accessed freely by the audit committee. It has that right. And then the auditors and KMP, they will be heard in the audit committee meetings, and when the audit committee is considering the auditor report, they will be invited to the meeting. They will be given time to till their case, but they will not have the right to vote in the audit committee meeting. That's all about the provision for audit committee in Companies Act. Now we can see section number 179, which talks about the powers of the board. What are the powers of the board of directors? We already know that company is an artificial entity, and for that company, directors will be acting as an agent. The directors will do all the work for the company. So whatever the power of the company, all the powers can be exercised by the board of directors. But when you are exercising some powers, you need to get approval from the shareholders. That is a basic thing that we all know. After that, the powers of the board they can exercise, but they should act within the limit of the Act, MOA or AOA. If there is any restriction on these three things, these three documents, they have to respect that and they have to stay within that limit. And then whatever the regulation the members are making, shareholders are making in the general meeting, that will be applicable prospectively. If you are making the general meeting today and making a resolution, it will be forward looking. It will be applicable to all the transactions and events which are happening after that general meeting. It will not have any retrospective effect. The power of board, some powers you have to exercise by means of resolution. You have to conduct a board meeting properly, and then you have to make a board resolution. Only then you will be you can exercise these powers. In short, there is a method called resolution by circulation. That resolution by circulation is not applicable for making these decisions like calls, buyback, issuing securities, borrowing money, investing the funds of a company, loans guarantee security, and then approval of financial statement and board report, diversification of business, amalgamation, reconstruction, takeover of another company by acquiring a substantial stake, or else other matter like political contribution, appointing, removing KMP, appointing internal auditor and secretarial auditor. In these things and other these list of things also, this can be exercised by the board of directors only when you are conducting a proper board meeting and then getting the board resolution. The board of directors can allocate some of its powers to some committee of director or to a managing director or to some manager or principal officer of the company, and some branch office also you can delegate some powers, and that power you can give such terms and conditions also upon which they have to exercise those powers. Next, you can the shareholders in the general meeting, they can impose some restriction on the power of the board. The shareholders may tell some condition. This power you can exercise only after getting the approval of shareholders. Like that, they can give some restrictions. That power is there, the shareholder. Normally, the shareholder will attend the general meeting only, and they will not interfere in the day-to-day business of the company. But in some cases, the shareholders can interfere in the day-to-day business, and they will take over the company. They will take all the decisions in their hands. They will not let the board of directors run the company. That cases are given here. The directors are not acting in the interest of the company. All the directors are interested in a particular transaction. There's a deadlock in the management. The shareholders will take over the company and exercise the powers of the board. And this provision is not applicable to some banking companies. Like when you want to obtain a loan, you have to get the approval of board of directors using a board resolution. But this will not be applicable to a banking company. Like that, they have given some exemption that you can read and see. So that's all about section number 179 about the powers of the board. Now we can see section number 180, which tells about restriction on powers of the board. What are the restrictions that are there on the powers of the board in the Companies Act? These restrictions are given in the Companies Act, and this section is particularly not applicable to a private company. This section, what it is telling, some things you have to do only after obtaining a special resolution. You have to get the approval of the shareholders. After that only you can do some major changes in the business. What are the things you can do after getting the approval? To sell, lease or dispose of substantially the whole of undertaking or the whole of an undertaking. What is the meaning of undertaking? Simply you can understand it as business. For example, the company is in a business, the director want to sell the entire business as a going concern. This they can do only after getting the approval of the shareholders in a general meeting by passing a special resolution. You are selling or leasing or disposing of in any other manner. For that you have to get the approval of the shareholders. In that special resolution passed by the shareholders, they may tell some conditions like you can sell this undertaking, maximum this much undertaking percentage. For example, 20% you can sell. Like that they can give the conditions, and what are the proceeds that are coming out of that sale. The consideration which you are getting, that how you have to keep, in which company you have to invest, like that. Those conditions also may be specified by the shareholders. And if you are going to do some kind of capital reduction, you have to follow the appropriate provisions in the Companies Act for that, and then you have to do it as per that provisions only. If the buyer does not know any of this, but he purchased the undertaking, but the special resolution was not passed, that what will happen to the buyer? The buyer will have a clean title if he purchased in good faith. And one more exemption, if the business of the company itself is selling or leasing, then in that case this will not be applicable. They have given meaning of what is the meaning of substantially the whole of undertaking. That and all they have given. You can read it here. And then undertaking means they have given the definition also. Investment exceeding 20% of net worth or guarantees 20% of income. That is the meaning of undertaking. Meaning of substantially whole of undertaking also they have given. And then the next point is when you are doing a merger or amalgamation, out of that the shareholders are getting a compensation, consideration. That consideration, if you want to invest, for that also you have to get the approval of the shareholders because that is the shareholders' money. That money, if you are investing in trust securities, these are some kind of safe securities. In that you can invest without getting the approval. But if you want to invest in any place other than the trust securities, you have to get the approval of the shareholders through a special resolution. If you want to borrow money more than the limit, what is the limit? Paid up share capital plus free reserve plus security premium. The already borrowed loan plus to be borrowed loan, all that exceeds the limit, then you have to get the special resolution of the shareholder. They have given such other information relating to that also, like temporary loan will not be included in that borrowing. Like that they have given meaning of temporary loan. Everything is there. You can read it here. If the director has taken some loan from the company and that you have to extend the time period for repayment or you have to waive off that loan, like that, for doing that also you have to get the approval of the shareholder by way of special resolution. If you want to do any donation to charitable fund, etc., for that you have to need an ordinary resolution that is discussed in some other provision in this chapter. So that's all about the restriction on board powers in section number 180. Now we can see section number 184, disclosure of interest by director. Here we will be seeing general disclosure and specific disclosure. Interest by director means whenever a director is interested in a transaction or generally in some other companies, he should disclose it to the other directors in the board. So that should be the general disclosure. At the first meeting in which he is participating as a director, he is appointed as a director in the first meeting, and then in every financial year first meeting, and then whenever there is a change in the particulars, he should make a disclosure of his interest, whether he is interested in the company or other body corporate firms or some other association of individual in which he is having some shareholding or influence. Everything he should say, he should disclose it to the board of directors in these intervals and in these situations. Now, after that, that disclosure will be in the form of a written manner, and it will be in this form, and it should be disclosed at the meeting held immediately after the date of the notice. After giving the notice, if the next meeting is happening, and he should disclose it there. And that notice will be kept in the registered office, that information, and it should be preserved for 8 years from the end of the financial year in which they relate. If he is giving the disclosure in a financial year, for the next 8 financial years, 8 years, we have to preserve that information. That information will be in the custody of the company secretary or any other person who is authorized by the board. It should be kept in the registered office. So the next thing is specific disclosure. This generally we saw whatever the interest he is having, he has to disclose. But whenever a specific contract or arrangement is being discussed in the board meeting, and in that contract a particular director is interested, so that also he should give. What is the interest? If he is having more than 2% shareholding in that other body corporate, which is a party to the contract, he is the director is a promoter, manager, of CEO of that body corporate, or we are making a contract with a firm or other entity where the director is a partner, owner, or member. If the director is related to that other party in the contract, then that contract, when we are discussing the board meeting, he should disclose it to the board of directors. When we have to make the specific disclosure, when the contract is discussed for the first time in that board meeting, we have to make the disclosure, and he should not participate in that meeting. He should not discuss the matter. He should not vote in that meeting. Whenever that particular contract is being discussed in the meeting, he should not discuss, not vote. And when we are entering into the contract, he is not interested. But after entering into the contract, he becomes interested. Now what we have to do? He should disclose the interest in the first meeting after he becomes interested. After he becomes interested, the first board meeting which is happening, he should specifically disclose the specific disclosure of the interest of such director. They have given some exemption that you can read here. And if the director is not disclosing properly, he did not follow this section and disclose, and he did not stop from participating. He participated, he voted, even though he is an interested director, he voted, and that contract is passed and some loss is occurring to the company, the contract is voidable at the option of the company. If the company wants, they can cancel the contract. And it is voidable and not void. If the company decides that they will complete the contract fully, they will execute it fully, they can do it. But if the company decides that we will not do it, we will cancel the contract, it is voidable at the option of the company. And punishment for contravention, if you are not doing as per this section, you are going against this section, then 1 lakh rupees penalty is there. Then if a director is having interest in a company and it is not legal as per any other provision of any other act, then that is there as it is. This section will not apply to that and all. If under any other law the director should not have such interest, then that is separate and that should be dealt separately. If the holding is up to 2%, one company and another company is doing transaction together, and then the directors of each other company, they are not having 2% shareholding, not holding more than 2%, up to 2% only the directors are holding the shares in each other's companies, then in that case this section will not apply. You need not make some specific disclosure and all as per this section exemption they have given. In short, two companies are doing transaction and each other director are there and they are having up to 2% shareholding in each other company. Then no need to follow this section 184. So that's all about the disclosure of interest by director. They have given an example here. You can read it. That's all about this section. Now the next section is section number 185, loan to director. In what case you can give loan to director? That is one important point. If you want to give a loan to director, the simple thing is you have to pass special resolution in general meeting. The general rule is that you are not permitted. You cannot give the loan to director or his relative or the holding company director or the partner of the director, relative of such director. You cannot give any loan to the director or person related to the director. And any firm in which the director or his relative is a partner, to that firm also you cannot give any loan. But in some cases you can give the loan. That relaxation from the restrictions is given here. First point, you have to pass a special resolution in the general meeting. In that also, after passing the special resolution, you cannot give the loan directly to the director. You can give the loan to the person in whom the director is interested. For example, the firm in which the director is a partner or the company in which the director is a director. Like that, you can give the person loan to the person in whom the director is interested. What is the exact meaning of the person in whom the director is interested? That is also given here. In the section itself, they have given the meaning. Now, you have to pass the special resolution. After that, what? When you are giving it to the company, the borrowing company should use it for principal business activities. That you can specify. That is a condition. That condition is given in the act itself. And then the person in whom the director is interested, that list is given here. You can read it here. And in some cases, the restriction will not apply. If you are giving loan to a managing or whole-time director, that loan is specified in the conditions of service, the service agreement. Then, or you are giving the loan based on a scheme which is approved by a special resolution. In such cases, you can give it freely. This restriction will not apply. A company in its ordinary course of business, it is giving loan, guarantee, or security, and then it is charging the interest. Minimum interest is government securities interest. You will have some government bond or treasury bill, and that bond you have to select the bond which is closest to the duration of the loan. You are giving a loan for 20 years, you should select the government security which has the tenure of 20 years, and minimum that much rate of interest you should charge, which is charged in the government security. If you are giving a loan by a holding company to a wholly owned subsidiary, then this restriction will not apply. Guarantee also in the same manner. If you are giving from holding to wholly owned subsidiary, then also this restriction will not apply. And when you are giving from holding to wholly owned subsidiary, this loan should be used for principal business activities. They have given the penalty for contravention and some exemptions also. You can read it here. Out of this exemption, private company exemption is very important. They are giving exemption to a purely private company. What do they mean by purely private company? This term I have given. The private company should be outside of the public money. They should not use any public money in their business. In that case also, this section will not apply to them. No public money will be involved. Like no other body corporate has invested in that private company. And then they are having a healthy amount of loans. The borrowings of that company is within the limit. The limit is specified here. And then they have not done any default in the borrowing. Then in that case also, the private company will be exempted from following this section. And one more condition is that the private company should not be committing a default in filing the annual return and then the financial statement under these sections. If such a private company is there, they will be exempted from following this particular section. So that's all about this section, loan to directors. Now the next section which we are going to see is loan and investment by company, section number 186. This section is applicable to both public and private companies. This is an important point. The next thing is, here in this section, we are permitting investment only through two layers of investment companies. First, understand what is an investment company. Investment company means the main business of the company is to make investment and acquire the securities. 50% of its asset will be in securities, and then 50% of its gross income will be income from the investment business. So, such a company is an investment company, and we can keep only two layers of investment company for doing investment. If we are keeping more than two, it is not allowed. The next point is, in some cases, we can keep more than two layers of investment companies. That cases is given here, like company incorporated outside India, and in that country it is allowed. And then if you are having a subsidiary for the purpose of any law requirement, then also not, it is not a problem. Then how much loan and investment you can make? For that also we are having a limit. The types of transaction for which the limit will be applicable is loan you can give, guarantee, security, acquiring the securities of any other body corporate. For these transactions, this limit will be applicable. The maximum limit is A, B, two amount you have to find out, and then the higher of the above, you have to take that amount, and that is the limit. 60% of paid up share capital, free reserves, security premium total, and then 100% of free reserves plus security premium. Out of this higher amount you have to take, that is the limit. If you want to make amount the investment loan, guarantee, investment, security acquisition more than this limit, then you have to take the approval. Approval means the approval of the shareholders by passing a special resolution. That entire thing is given here in the form of a chart. Now the next point is, if you are giving loan for advance to your employees other than managing director or whole-time director, then you have to give it as per the conditions of service. If you are giving to managing or full-time director, then section number 185 will be applicable and you have to give it as per that. If you want to give more than the specified limit, then you have to pass a special resolution. That point is given here. Next, this kind of special resolution that you are passing, particularly in this section, it should be passed by way of postal ballot. This is an important point. And 1% company and members up to 200. If your company has members up to 200, you need not do this through postal ballot. Next, loan guarantee security. If you are giving to a wholly owned subsidiary or joint venture, the special resolution is not required. And whenever you are passing a special resolution to approve this, the special resolution should specify the amount up to which you can do the loan guarantee security investment with this special resolution. The upper limit also they should specify, which is more than the limit of the Companies Act. If you are acquiring wholly owned subsidiary, for that also special resolution is not required. You have to give this disclosure to the member relating to the loan guarantee security investment and all. And for doing this, you need to have a unanimous resolution of the board. That is, all the directors who are present at the meeting, they should give consent. If you are making any term loan, if you are getting any term loan from a public financial institution, then also you have to get the prior approval of that financial institution before doing this transaction. Not any default. Whenever you obtain a loan itself, even if you are not doing any default, you are repaying properly. In that case also, you have to get the approval of the public financial institution. They have one exemption where we have to where we do not have to obtain the approval of the public financial institution. That is, if you have obtained the loan guarantee security investment, but it is not exceeding the limit. So in that case, and you are not having any default in the loan also, loan or interest, then in this case, you need not get the prior approval of the financial institution within the limit and no default. The next point is, if you are giving a loan, the minimum yield should be of the interest rate on the government securities closest to the duration of the loan. That point also given here. Relating to that, some clarification and modification is given here that you can see. And if you are getting deposits from public or you are getting deposits in general and you have made some default in it, deposit amount or interest, then you cannot make the loan guarantee security investment before clearing that default. Whenever the default is there, till that you cannot do the loan guarantee security and investment. The company should maintain a register for recording all the loan guarantee security investment that they are making. It should be in this form. Following the particulars of the loan guarantee should be there. It should be chronologically maintained. The time period wise it should be there. Within 7 days of the transaction, you should enter the thing into that. Enter the transaction into the register. It should be kept at the registered office. You have to preserve it permanently, not for a fixed time period. Permanently, it should be there. It should be under the custody of the company secretary or the person authorized, and then whatever the entry you are making in that register, it should be verified and authenticated by the company secretary. If any member shareholder is asking information and copies of such register, you have to give it to him. And then the maximum fees is 10 rupees per page you can charge, like that it is given. And in some cases, section 186, this section is not applicable, like for a banking company in an ordinary course of business, insurance company, housing finance company. If you are a company for financing industrial enterprises, your objective is to finance the industrial enterprises with or providing infrastructural facilities. If you are in this business, then this section will not apply to you. If you are an investment company also, the investment made by the investment company need not follow this kind of a thing. And then if you are registered under section 12 of SEBI, that is, you are a stockbroker, sub-broker or share transfer agent, banker to an issue, registrar to an issue, if you are doing this work, you have to follow the restriction imposed by the SEBI also. When you are doing intercorporate loans and deposit, you have to follow the additional restrictions, if any, imposed by the SEBI. The punishment for contravention is also given here. Some exemptions also they have given. You can read it by yourself. That's all about section number 186 relating to loan and investment by the company. Now we are going to see one of the most important part of this chapter, that is section number 188, related party transaction. This is very, very, very important. They have a very high chance of asking this in the exam. So please concentrate more. Here, related party. What is the meaning of a related party? They have given in detail. A lot of things are covered here. If I want to explain this, it will take a lot of time. Basically, whenever you are related to the company in any manner, if you think that will be maximum covered under this list. So it will be a related party transaction for sure. Normally, all the persons related to the company, whoever you can think of, they will be under the related party list. This you can read later. This is very important, but I'm not highlighting it because each and every word in this definition is important. If I want to highlight, I have to highlight the entire each and every word of this definition. So I have not highlighted, but this is very, very important. This you have to definitely read and understand who will be covered under related party. Just an overview understanding is required. Next, such other person also they have given. We can include any other person also in the related party by rules. So that is also given here. These people are also covered under the related party. They have given the meaning of relative also here. In the above definition, they will use the word relative, and for that relative, they have given the meaning here. Now, next thing is, what are the transactions you cannot do with related party? Sale, purchase of goods or materials, sale or buying of property or land, leasing of property, purchasing any services, or you are appointing any agent for selling goods, materials, services, property, or you are appointing a related party in an office or place of profit. You are giving a job to the related party individual, and then underwriting the securities of the company. If you are doing these kind of transaction with the related party, then it will be covered under section number 188. What is the meaning of office or place of profit? If you are giving such job to a director and he is getting more remuneration over and above the remuneration which he will be normally getting if he is a director, then that will be office or place of profit. The next thing is, if you are giving that job to other than a director, whatever you give, anything by way of remuneration, salary, fee, everything will be considered, and then such person will be called as, such a position will be called as office or place of profit. You are giving it to him. The second point will be applicable even if you are giving such place of profit to a firm, private company, or any other body corporate. First thing is only for a director. Second one is individual other than director, and these persons also, if you are giving the office or place of profit to them, you are giving some kind of remuneration to them, then it will be covered under office or place of profit. Next, section 188 does not say that you should never do related party transaction. That is not possible. But you have to mention certain particulars and then do it transparently. That is the main thing. Related party transaction for which no approval is required. If you are doing it in the ordinary course of business and at arm's length price, then approval is not required. Now the next point is, related party transaction need the board of directors approval. Board of directors should give the consent to the related party transaction. In related party transaction, we have two types. First type is, you need to approve by an ordinary resolution by the shareholders in the general meeting. The second type is, such ordinary resolution is not required from the shareholders. This type of transaction should be approved by the board of directors. This is very important. And then next thing is, the resolution which you are putting up for approving a related party transaction, in that these information relating to the related party transaction should be mandatorily present. And then what are the transactions for which ordinary resolution is required at the general meeting by the shareholders? That list is given here. If a type of transaction is there and it is more than a limit, then we have to obtain the ordinary resolution approval. What are the transactions? Sale, purchase, or supply of goods or material. If such transaction is exceeding 10% or more of the turnover. If it is amounting to 10% or more of the turnover. So, for sale or purchase of goods or material, if the transaction value is 10% or more of turnover, then you have to get the ordinary resolution. If they are selling or disposing of property or buying property, then 10% or more of net worth of the company will be the limit. If the transaction amount is coming to 10% or more of the net worth, then you have to get the ordinary resolution. Leasing of property, 10% or more of the turnover of the company is the limit. Availing or rendering any services, 10% or more of the turnover. This limit is for individual transaction or together during all the transaction during a financial year, along with the previous transaction. This limit for a particular transaction also you can take, or else if the total transaction which you entered into till now is coming to 10% or more, then also you have to get the ordinary resolution. Next thing is, if you are appointing a person for a place of profit, then you are giving monthly remuneration more than 2.5 lakh rupees, then also ordinary resolution is required. If a person is underwriting, related party is underwriting your securities, the amount of securities he is underwriting is exceeding 1% of the net worth of the company, then also ordinary resolution is required. The turnover or net worth on which day you will see audited financial statement of the preceding financial year. Explanatory statement. The general meeting which you will be conducting for the ordinary resolution, in that also these details should be there. And then if any shareholders or related party, then he should not vote for that particular transaction approval in the general meeting when you are putting up the resolution for getting an ordinary resolution approval. That related party member shall not vote in such a resolution. And then if 90% or more of the shareholders members, if they are related parties, then this particular point alone will not apply. They have given some exemptions that you can read it by yourself. Then scope of second proviso also they have given a clarification. This you can read. The next point is, if there is a transaction between holding company and wholly owned subsidiary, the wholly owned subsidiary is such a subsidiary that it will be consolidated with the parent company and its accounts will be placed in the general meeting before the shareholders of the holding company. If it is such a subsidiary, then ordinary resolution is not required. If a resolution is passed also, if it is passed by the holding company, then it is sufficient. No need to pass again separately in the subsidiary company. Subsidiary company, you did not pass the resolution separately. Next thing is, the related party transaction will be voidable at the option of board or shareholder. If you want to get the approval of the board for the transaction, you are supposed to get the approval, but you did not get the approval and did the transaction. Now, because of that, if you are getting any loss, if you are making any loss for the company, then the board of directors, they will cancel the transaction and they will keep the director responsible who did the transaction. If you are going to get the shareholder approval, you need the shareholder approval, but you are not getting it, and then you are processing the transaction without getting the approval. Now, if the shareholders want, they can cancel the contract and then they can recover the damages from the director who did that default. So that related details they have given here, and then punishment or contravention section they have given same like all the other sections, and then related party transaction whatever you have done that should be mentioned in the board report, and then the explanation also you have to give why you did that related party transaction, why is that necessary, that you have to give. And then this will not apply to compromise arrangement amalgamation. That clarification they have given here, that you can read it by yourself. Here also they have given some two case law reference which also you can read it by yourself. So that's all about related party transaction under section 188.
Now we can see about the topic of board meetings, how they will conduct the board meetings, how the directors will participate, everything we can see now. First thing is how the directors can attend the board meetings. They are having three methods. First one, in person. They can come personally to the venue where it is happening, and then they can attend the meeting. Video conferencing they can use, or any other audio visual means also they can use. So the directors they can also use the electronic modes, that is also allowed. Then video conferencing means it should be a communication facility which is audio visual, electronic, and all the directors should be able to communicate concurrently. They should be able to speak properly with each other without an intermediary. Then the audio visual means should be capable of recording and recognizing the participation of the directors. By that electronic mode, you should be able to see whether the director has participated or not, and you should record whether he has participated or not. Then whatever the proceedings that happen, the meeting conducted online, that also you have to record it along with date and time. That should be the capability in the audio visual means that is being used. Then the central government also they are having one power. They can bring out a list of the matters, and this list of the matters they cannot do through video conferencing. They have to do only through meeting in person. Like that, they can bring one notification. Currently, this list is blank only, so no need to worry about that. The next thing is about the procedural points. What all the procedure to do the meeting? Every company should do the arrangement to make sure that the video or audio visual connection is properly maintained throughout the meeting and there is no failure of the connection. The chairperson and company secretary they have to safeguard the integrity of the meeting. The data that is shared in the meeting and the discussions that are happening in the meeting that should not be leaked outside. That should be secured properly. Then video conferencing facility whether it is properly available, that they should check. To record the proceedings and prepare the minutes, they will record the proceedings, they will prepare the minutes, they will store the tape recordings or other recordings of the meeting that is happening at least before the time of completion of audit for that year. For that financial year they will do the audit, right? At least till the completion of audit they have to maintain the recordings for the board meetings. Then they have to make sure that no other person other than the director is attending. So the director will be sitting in a room and he will be attending the meeting, and in that room there should be no other person. Only the director can attend the board meeting, because in board meeting they will share the confidential information and all between the directors for discussion. So that should not be known by any other person. Then the participants, the directors who are attending, they should be able to hear the speech of the other directors. They should be able to attend. They should be able to hear the things. Everything should be happening. Then notice of the meeting. They have to send the notice to all the directors. And in the notice, they should mention that they are having the option. You can participate either in person or you can use the electronic means also, electronic mode also like that. That option should be present in the notice. If a director wants to attend through video conferencing, they have to communicate it to the chairperson or the company secretary. They have to give the prior intimation so that the company and then the company secretary, everyone can make proper arrangement for the electronic mode. And if a director does not intimate that he is going to attend through video conferencing, it will be assumed that he will be attending in person. And there is one more thing also. Before the start of the financial year, the director can give a declaration that in this particular financial year, whatever the board meetings that are happening, everything I will attend through video conferencing only. Like that, you can give the declaration first itself. Then what will happen? All the board meetings you will attend through video conferencing. No need to give intimation for each and every board meeting. But you have given the declaration, and in between one board meeting is happening, and you want to meet in person. You want to come personally and attend the meeting. Then you can give the intimation to the company that, like earlier, I gave you a declaration that for the entire year I will attend through video conferencing. But now this meeting alone I want to attend in person. This intimation should be given to the company in advance so that they can make the arrangement. Then roll call. When the meeting is started, a roll call will be started. What is the roll call? Each and every director, they will identify themselves and they will be saying present. I am present, you are present, like that. Each and every person will be present. That will be ensured by doing the roll call. It will be done by the chairperson. In that, what they will ask: name, the location from which the directors are participating, then whether they received the material, the PPT presentation, or then the reports that are to be discussed in the board meeting, whether they received the material. Then no person other than the director is having access to the meeting. The director will be in a room and then he will be attending. In that room, no other person is there. Or the computer in which the director is attending, no other person has access to the computer and they cannot attend through the computer. That should be ensured. After the roll call, the chairperson or company secretary will inform the names. What are all the names? The names of persons other than directors attending the meeting. So there will be directors attending the meeting and some experts might also be there. Like that, the persons other than directors who are attending the meeting, their names should be informed by the chairperson or company secretary. They should also confirm that the quorum, the minimum number of members required to start the board meeting, that is present. Then a director participating through video conferencing, they will also be counted for quorum. Then scheduled venue. And one more thing, the quorum should be present throughout the meeting. Then where the meeting is happening, that will be mentioned in the notice. After that, the registers. When the board meeting is conducted in person, all the persons must sign certain statutory registers. But it is not possible in the case of online or video conferencing meeting. In that, we will assume that the statutory registers have been signed and all the directors, they will give their consent that I agree to sign the statutory register. Like that, by getting that consent, it will be assumed that they have what we can say, signed the statutory register in person. It will be assumed like that. Then their consent, it will be recorded in the minutes of the meeting. Each participant, before, if a director wants to speak, before speaking they have to say who I am. This is my name, I am the director, I am speaking, like that. They have to identify themselves. Then if the statement of a director, if a director is speaking and in between the internet connection is a bit low or some kind of a lag is happening, it is buffering, the director is not able to speak in a flow, it is interrupted, then the director should be given what we can say, an opportunity to speak again, to repeat the particular thing what he told, and the chairperson also can request for a repeat. Then if a motion is objected and there is a need to vote, there is a resolution and they have to vote, then chairperson will call each and every person and he will note the voting of each and every person. Each and every director will be called by the chairperson and he will note whether they voted in favor or against. Like that, they will note each and every director's vote. Then, as we already saw, to unauthorized person other than the director and persons invited for the meeting, no other persons should be accessing the meeting. The next thing is point number 13, summary of decision on each agenda item. After discussing one item, they will make a vote and the chairperson will take note of all the votes of all the directors. Then, after completing the discussion, the chairperson will announce the summary. What is the decision taken, approved or rejected for the particular item? And after that, if the scheme or the item is approved by the majority of the directors, then the chairperson will read the names of the directors who disagreed for the resolution, who did not approve the resolution. Their names will be read out by the chairperson. The minutes will be prepared in the draft manner and it will be preserved. And who are the directors who attended the meeting through video conferencing, their names will be given in the minutes. After that, the draft minutes will be circulated to the directors within 15 days. From the meeting, 15 days, the draft minutes will be sent to all the directors. After receiving the minutes, they have to confirm it, whether this is the proper minutes. If they are having any change, they have to tell it to the chairperson or company secretary. Within 7 days, they have to approve the minutes, whether it is properly representing whatever that happened in the meeting. Then, after completion of the meeting, the minutes will be added to the minute book after approval. Then, all the directors, it is not possible for every director to attend every board meeting, but they should try to attend as many meetings as possible. And for 12 months continuously, you are not even attending one single board meeting, then you will be considered to be vacated your office. Like, you will be considered to be vacated your office. As per section 167, you will be considered that you have vacated your office. Then notice of the board meeting. At least 7 days prior to the board meeting, you have to give the notice to all the directors in their registered address. You can send by hand delivery, post or electronic means. There is no problem. If you want to give a notice which is less than 7 days for an urgent business, then in that meeting one independent director should be there. If you are conducting a meeting less than 7 days notice, one independent director should be there. Then one more point: if you are not conducting the meeting you are not conducting the meeting after 7 days, like the notice is less than 7 days only, and you are not even having independent director. Now 7 days also you did not fulfill, independent director also is not there. Then after doing the meeting, you have to send the proposal, you have to send the resolution, and the meeting resolution should be approved by the independent director. One independent director should approve the resolutions taken in the meeting after the meeting. So the decision should be circulated to all the directors, and one independent director should give the ratification, should approve it after the completion of the meeting. Then same thing, video conferencing mode, they have to give the intimation. Then that thing is there. This also we already saw. Penalty also they have given. So that's all about the provision for the board meeting. We have seen the entire procedure that is needed to be followed for conducting the board meeting. Now we can see the provision of quorum. What is the meaning of quorum? The minimum number of members that should be present at the meeting so that we can start the meeting. If the minimum number of members not reached, then we will adjourn the meeting. So here what is the quorum? Minimum one third of the strength or two directors whichever is higher. One third of the strength or two directors whichever is higher. This will be the quorum. And in the total strength, if there is any vacancy place, that will not be counted. For example, there are 10 directors and 2 places are vacant. So total you have to take 10 directors only, total strength, not 12. So that is the thing given here. Only the directors' total strength who are there, that only you have to take. Vacancy you should not include it. The quorum should be there throughout the meeting as we saw already. And the articles of association can give a higher quorum, but they cannot give a lower quorum. For example, the Companies Act says, according to the Companies Act provision, you need 3 directors. But the articles says that you need only 2 director. Like that, the articles cannot say. The articles does not have a overriding effect on the Companies Act. If Companies Act says minimum 3 is required, then minimum 3 is required. You cannot say that the article says we can do with 2 directors itself. Like that, you cannot say. Minimum 3 is always required. But if Companies Act, according to the Companies Act limit, you need some 5 directors. But according to the articles, they are saying that you need 8 directors. Then that is okay. Articles is stricter than the Companies Act. When you follow the articles, automatically Companies Act will be followed. Then in that case, articles you can use it. There is no problem. Then when you are participating through electronic means also, that also will be counted for quorum. Then if you're having some vacancy in the board, but minimum quorum is there. For minimum quorum, you're having the directors. Then there is no problem. But you're having vacancy and you're having, for example, according to the Companies Act, you need 3 directors to be there, but only 2 directors are there. Remaining everyone resigned. There is a vacancy in all their position. Then these 2 directors will be called as the continuing director, and they can do only 2 work. First work to they can conduct the meeting for increasing the number of directors. Second one, they can summon a general meeting. Only 2 powers are there for the 2 continuing director. Then interested director. So interested director means according to the section of what we can say disclosure of interest by the director. When a director is interested in a company and with that company we are doing the arrangement, or the director is interested in a contract, like that the director should be personally interested. They will have the interest because of that contract. The director will get some profit or something will be there as a benefit for the director. Then such a thing will be called as an interested contract, and they will be called as an interested director, which will be under section 184. Here what they have given related to the interested director, total director strength we are having, in that two-thirds of the director are interested. Two-thirds of the director are interested. Then how the resolution will be passed properly? The board meeting they have to do the resolution. If two-thirds of the director are interested, they will work for their profit only. They will not look for the company profit. They will not look for the company's interest. So in that case what will happen? The total number of non-interested director, they will be considered as quorum, and it should be minimum 2. Total strength, you are having two-thirds, they are the interested director. So the minimum, the remaining non-interested director, they will be considered as the quorum, and it should be minimum 2. For example, we are having what we can say 9 director. Two-thirds means it comes to 6 directors. So when you see 6 directors, they should be the interested director. When these are the interested director, minimum 6 directors are interested director. Then the remaining 3 director, they are the non-interested director. Then the quorum will be 3 directors. And they're saying that this quorum, it should always be 2. Minimum 2 should be there for a quorum, because a single person cannot conduct a meeting separately without having any other person to speak to. Then, if the quorum is not achieved and you're not able to conduct the meeting will be adjourned to the next week. Same time, same place in the next week. Then one person company, no need to follow the quorum, because only one director will be there. Then no need to follow the quorum and all. So that's all about the provision for quorum. The next provision is passing for resolution by circulation. What is resolution by circulation? There are certain things, certain matters which can be passed by a resolution only through a board meeting. What is board meeting? You are physically assembling all the directors and you are doing the discussion and you are passing the resolution. That is called as a normal board meeting. But we are having one more method, that is called as the resolution by circulation. For important matters, you will invite all the directors, give a notice, assemble everyone, conduct a board meeting, then do the resolution. But for normal, what we can say, routine matters, which does not require the consent of all the directors, like they need the consent, but no director will oppose this thing. It is a normal thing that should be done. For unimportant matter, they will pass the resolution through resolution by circulation. All the directors will not assemble one single place in this resolution by circulation method. They will prepare the resolution and it will be sent in circulation to all the directors. Everyone will approve it and then it will be approved. There is no need to assemble all the directors in a single place and conduct a board meeting. For unimportant matters, we can do this. The resolution, draft resolution, you have to circulate to all the directors. It should be sent to their registered address. You can send it by electronic means, courier, post, hand delivery. It should be approved by a majority of the directors. Majority of the directors should approve it. Then it will be considered to be approved. Then, along with the particular resolution, you have to send the necessary papers also. Other material, other document, contract, that also you have to send it along with the particular resolution. If a resolution is not passed by resolution by circulation, when it will not be passed? When a resolution is you are asking it to be done by resolution by circulation, but one third of the total number of directors. That is, one third of the total number of directors, they are saying that no, you should do this resolution only in board meeting. Then you have to put the resolution only in board meeting. Then RBC is not allowed. Then whatever the resolution you are taking through resolution by circulation, this you have to take a note again in the next board meeting. When you are conducting the board meeting again, you have to take a note that these were the decisions that were taken through resolution by circulation, that you have to announce one time. So that is the resolution by circulation provision. Now, the next topic is vigil mechanism. What is the vigil mechanism? For example, from employee or director, they know that something wrong is happening in the company. Then there should be a particular authority in the company where they will see the complaint. Something wrong is happening, then they will do the investigation. There, that is called as the vigil mechanism. So, the vigil mechanism will be established. Some directors will be there, and if you are finding anything wrong in the company, you are working as an employee or as a director, you can report it to the vigil mechanism. They will take the appropriate action, and whoever the person who gave the information, they will protect that particular person. The vigil mechanism will make sure that the person is not disadvantaged. The person will not be tortured. The person will not be affected in any manner because of giving this information. Every listed company should form this vigil mechanism in their company. And if a company accepts deposits from the public deposits under the acceptance of deposit chapter, you are accepting the deposit from the public, then you also should prepare the vigil mechanism. Then, if you borrowed money from bank and public financial institution more than 50 crore, then you also should maintain a vigil mechanism. You should prepare the authority. You should maintain the vigil mechanism committee, where the employees and directors will report the genuine concerns. They have to protect the employees who gave the information. The directors and employees can give the concerns. If an audit committee is there in the company, then the audit committee will oversee the vigil mechanism. The audit committee will supervise the vigil mechanism. And the next thing, if there is no audit committee, then the board of directors, they will nominate a particular director. They will tell that this particular director will handle the work of the what we can say vigil mechanism, and he will take the role of the audit committee, like that you can say. And this particular director, he will be reported all the concerns. All the concerns will be reported to him. Then, if there is any exceptional case, there is a big problem, then the person who gave the information, you can directly give them the access to the chairperson of the audit committee. They can directly talk to the chairperson of the audit committee if the issue is very serious. Then, if a person is doing repeated useless complaint, they are doing it repeatedly and there is no other matter. There is no problem happening, but still they are doing the complaint. Then they have to take the appropriate action against that person. Then the details of the vigil mechanism, they have to give it in the website and in the board's report. Punishment for contravention, that also they have given. Then here, one more point if you see, the audit committee will oversee the vigil mechanism. Now, audit committee members, there will be members in the audit committee. They will be directors only. If that members, they are having any conflict of interest, they are also interested in the particular matter where the vigil mechanism is investigating, then these members, they will not do the oversee. They will not supervise the vigil mechanism. Other members, other directors who are members of the audit committee, they will only do that. If any person in the audit committee, he is a member of the audit committee, he has some conflict of interest in the matter, then he will not involved in that particular matter that they have given here. Then nomination, remuneration committee and stakeholder relationship committee. Here, nomination and remuneration committee, here also director only will be there. They will be, this nomination remuneration committee should be appointed by the prescribed companies like listed public company, and if company satisfies these conditions, they have to appoint the nomination and remuneration committee here. This committee, what they will do? They will nominate the persons. They will select the persons who are, what we can say, who are eligible to become the member of senior management or board of director. They will nominate those persons for those positions. Then they will also decide the remuneration, how much remuneration they have to give, how much salary, incentive, options, everything they have to recommend. The NRC will recommend to the board of director. So, listed companies should appoint nomination remuneration committee. Public companies with paid up share capital 10 crore or more. Public companies with turnover 100 crore or more. Public companies with outstanding loans debenture deposit more than 50 crore. So here it is 10 crore or more, here 100 crore or more, here more than 50 crore. This difference you have to keep it in mind. Then, if it is a joint venture, wholly owned subsidiary or a dormant company, then no need to constitute a nomination remuneration committee. If you are not fulfilling the condition, if you fulfill the condition, you have to appoint the NRC. But continuously for 3 years, you are not fulfilling the condition, then no need to appoint the NRC. The turnover, paid up share capital, everything will be based on the last date of the latest audited financial statements. In the NRC committee, 3 or more non-executive directors will be there. 3 or more non-executive directors will be there. And then not less than one half should be independent director. Half should be independent director. Then we are having one more requirement. We will have chairperson. Chairperson will be for the board of directors, and then we will have the chairperson for various committees also, like audit committee, stakeholder relationship committee, nomination remuneration committee, like that. For various committees also the chairperson will be there, and there will be one chairperson for the board of directors. These are all separate persons. Now, this chairperson of the board of directors, they cannot be appointed as the chairperson for nomination remuneration committee. The chairperson of the board, they can be a member, but they cannot be a chairperson of the NRC. Then functions of the NRC. Here they have to prepare the criteria for the qualification, independence of a director. For the independent director, they should prepare the criteria. What should be the criteria for an independent director to be in the company? They will recommend the remuneration policy. They will recommend for appointment and removal, everything they will do. Then they will evaluate the performance, how the board of directors is performing, how the committees are performing, how the individual directors are performing. Everything will be evaluated either by the NRC directly or through an external independent agency. Then they will create the policy, and the policy they have to make sure that the level of remuneration is proper, reasonable and sufficient. The relationship of remuneration to performance is clear. If you give how much remuneration, how much performance will be there, that should be clear. And remuneration, there should be a balance between fixed and incentive pay. How much you are paying fixed, how much you are paying incentive, how much based on the production target or then the profit of the company, that you have to define it properly. Then the policy, remuneration policy should be placed on the website. And then the salient features, most important points of the policy, that also you have to place it in the website, and you have to keep it in the board report also. The chairperson of the NRC committee, I told you that there will be a chairperson. This chairperson should be attending the general meeting. Then, if we, the next thing is the stakeholder relationship committee. Here also, if a company consists of more than 100 shareholder, debenture holder, deposit holder, or any other security holder at any time in the financial year, a company during a financial year, they are having more than 1,000. What 1,000? Shareholder, debenture holder, any other deposit holder, or any other security holder. If they are having this much people, they have to manage these people. Whatever the problem for this 1,000 people, they have to resolve that. For that, we are having the stakeholder relationship committee. Then, in that company, company where more than 1000 people are there in the form of stakeholders. These people together you can call them as stakeholders. Then you have to appoint the stakeholder relationship committee. The stakeholder relationship committee will be headed by a chairperson. I told you that there will be a chairperson for every committee, and this chairperson will be a non-executive director. Then objective. Their objective is to protect the interest of the 1000 members, security holders they are having. The chairperson of the stakeholder relationship committee will be attending all the board meetings, and then the general meetings, everything should be attended by the person. Penalty for contravention they have given. Then, if the stakeholder relationship committee they tried to resolve the issue but they were not able to resolve the issue, then there is no penalty on the SRC. If they do not even try to solve the issue, then only you can complain on the SRC, and then there will be a penalty for contravention. But they tried properly but they were not able to solve it, then there will be no penalty on the SRC. So here when you see, we saw the committees: vigil mechanism, nomination remuneration committee, stakeholder relationship committee. So here nomination remuneration committee and stakeholder relationship committee, for this we are having separate provision in LODR, which will be applicable for listed company. If you are a listed company, follow the LODR, no need to follow the Companies Act. That is what they are saying. One additional point. Now the next section is section number 181, where they have given the permission for the company to do contribution for bona fide and charitable fund. For bona fide means genuine fund. It is genuinely operating for a particular cause, and charitable fund means it is operating for the charity. It is doing good for the people for social benefit. Now to that particular fund the company can contribute. What is the limit? The limit is 5% of the average net profit of the immediately preceding 3 financial year. For example, you are taking for 25-26, then you have to see the immediately 3 previous financial year, that is 24-25, 23-24, 22-23. So these 3 financial year, take the profit that you are having and then total it, divide by 3, you will get the average net profit. Out of that, take 5%. This is the maximum limit you can contribute. This is through the board. The board can contribute only this much. If you want to contribute more than that, you have to get the approval of the members in the general meeting. General meeting approval. After that, you can contribute how much you want. But 5% is the limit for the board of directors. So here if you see, prior permission of the company in general meeting is required beyond the limit. Now 5% of the average net profits of the company for the immediately 3 preceding financial year. Here they have not told that in the current year, in the year in which you are making the contribution, there should be profit. Like that they did not say. This means that, for example, previous 3 years you are having the profit, but current year you are having the loss. But when you take a total and divide by 3, you will get a positive amount only. This much you can contribute in the current year, even if you are having a loss in the current year. So this is what they are dealing by this particular example. Now we can move to the next section, which is section 182, which is about the prohibition and restriction for political contribution. If you are making contribution to any political party, there is no limit, but you should be a older company. Like, you should not be a government company. A government company cannot do contribution to political party. That is not allowed. And a new company, a company in existence for less than 3 financial year. If it is in existence for less than 3 financial year, then that company is also not allowed to contribute to political party. Otherwise, people will start to create dummy companies and then they will contribute to political parties. So like that, they have given the restriction. Then procedure, how to do the contribution. The board of directors should pass a resolution in the board meeting, and this will be deemed to be justification in law. Then we are having some other things. Deemed political contribution. What are all the deemed political contribution? Donation to a political party you are giving, or you are giving it to a person. The company is giving it to a person only. This person will give it to the political party. Then this donation you are giving it to the person, right? That also will be deemed political contribution. After that, you are doing expenditure for giving advertisement in the brochure or pamphlet which is released by the political party. A political party, it is releasing a souvenir, like it is a pamphlet. Then in that you want to do the advertisement. For that, the company is paying amount to the political party for doing the advertisement in this particular pamphlet. Then this amount will be called as deemed political contribution. It will also be counted under the political contribution only. How much you did the political contribution, you have to disclose in the profit and loss account. Then modes of contribution, you can contribute through account payee check, account payee demand draft, electronic clearing system, any instrument, where it is notified by the central government. In this following mode only you have to do the contribution. Punishment for contravention also they have given. That's all about the political contribution section. The next section is section 183, where the company can do the contribution to National Defence Fund. Here also there is no limit, without any limit. The board of directors can give the contribution, or any person who's exercising the power of the board, any other person who's having the power of the board of directors, they also can do the contribution to the National Defence Fund. This section has an overriding effect. Even if you have written in the Articles of Association that this company should not do the contribution to the National Defence Fund, like that you have written in the articles, but this will not be considered. This section will be overriding it. You can do the contribution, and if the company is doing it against the articles, it will be valid only. Then you have to disclose it in the profit and loss account. So that's all about the sections. Contribution to bona fide and charitable funds, contribution to political parties, contribution to National Defence Fund. We have completed these three also. Now we can see the next section, which is section number 176, where defect in appointment shall not invalidate the actions taken. So when you are appointing a director, you have to check whether he is disqualified. That you have to check. If he is disqualified, you cannot appoint him. If he is fully qualified, there is no disqualification, then only you can appoint him. But you checked properly and you appointed a director. 2-3 months pass, and now this is the date. In this date, you got to know that the person was disqualified from the start. Now, this was revealed on this date. Now, what this provision is saying, the 2-3 months before the date, whatever he did the work, everything will be valid only. There is no problem in that. But after this date, whatever the work he is doing, that will be invalid. As a director, if he does any work after this date of revelation, that will be invalid. So, if any person is acting with this, if any person is doing any contract with the particular director who is disqualified on this date, then the contract will not be valid. It will not be considered as a proper contract, because only a director should do it. From this date, it was revealed that he was disqualified. Then after this date, whatever the work he is doing, he will not be considered to be doing it as a director. If he does anything like that, it will be void only. So that they have given any defect, disqualification or termination, anything that you did not know earlier, but now only you know. Then all the acts which he did prior to that date, it will be valid only. Then after that date, if he is doing any work, that will not be valid. That only they have given in various situations. When you read it, you will usually understand it. Then MDWTD manager. When you are appointing these people, first you have to appoint. After that, you have to get the approval from the general meeting. Then in the general meeting, if they did not approve it, then also the act which they did earlier, that will be valid only. So that is this provision. Defects in appointment not invalidate the actions taken. Now we can see section number 187, where all the investments done by the company in a property, security or other assets, it should be held by the company in its own name. It should not be held in any other name. So all the things, all the assets should be registered in the name of the company only. There are certain exemptions. What are all the exemptions? If you have deposited the shares or debenture to the banker for dividend collection and interest collection, that is one exemption. Second one, you have deposited it to the bankers. Why? To facilitate the transfer. You are going to sell it for the facilitation of transfer. If it is in the banker name, it will be easy to transfer. Then for that purpose, you have given it to the bank. Then also that is one exemption. Third one, deposit by way of security for repayment of any loan. You got a loan as a collateral asset. You have provided the security. Then also no problem. Depository investment as a beneficial owner. I hope you all know currently the shares are mostly traded in demat form only. In demat form, when you see the demat form, we are having one catch. The catch is that the share registered holder will be the depository. So here all the physical share certificate will be there with the depository, and the demat shares, the shares in the demat form, that only the persons will be owning and they will be trading. And the persons, shareholders, they will be a beneficial owner. This means that all the voting right, all the dividend, everything will be given to the shareholder, but it will be registered in the name of the depository. That is the meaning of beneficial owner and registered holder. Here, when you see the investment in the demat shares, it is not actually held in the name of the company. The registered holder is depository only. The registered holder is depository only. If a company buys shares, that also will be given to the depository only. Registered holder will be depository, but beneficial owner will be the company who bought the shares. Now, this is one more thing. For this, they have given the exemption. And the depository, when you see, there will be depository like NSDL, CDSL. Like NSDL is for the National Stock Exchange, CDSL is for the Bombay Stock Exchange. So like this depository, they have given one exemption that they have given here. The next thing, when you see, they have given the exemptions. But when the securities are not held in the name of the company, they have to maintain a register for that, and they have to enter the particulars for those assets in those register. It should be in this form, it should be maintained chronologically, and why it is not held in the name of the company. The reasons should be there. Everything should be given in the register. And if the asset is held in the name of the third party for a time being, for a particular time period alone, it will be in third party name. After that, it will be reverted back to the name of the company. That also should be mentioned. It should be maintained in the registered office. It will be in the custody of the company secretary. Then the entries will be authenticated by the company secretary. Punishment for contravention also they have given. Here one more thing. We are depositing the securities for transfer, for facilitation of transfer to the bankers. Now, within 6 months, if it does not get transferred, then the security should be transferred back to the company. That provision also we are having here. That's all about section number 187. Now, we have already seen section number 184, where there is an interest of the director. In a particular company, the director is interested, they are having the ownership or something like that. And with that company, our main company is doing a contract. Then, in that contract, the director will be interested and he cannot participate in the discussion regarding that particular contract in a board meeting. That and all we saw in section number 184. And for that thing, for the contract in which the director is interested, for those contract and arrangement, you have to prepare a register and maintain a list in what all the contract, what all the director are having the interest. That register should be maintained. That provision is given in section number 189, where register of contracts or arrangement where the directors are interested. As per section 184 subsection 2 and 188, you have to prepare the registers for one register for related party transaction, one register for contract or arrangement where the directors are interested. Then it should be prepared in the prescribed manner with the prescribed particulars. It is prescribed in rule number 16. It should be maintained in form number MBP4. In that, all the particulars of companies or body corporates where the director has interest, that should be there. Interest as per section 184. And here one company will not be there. What company? In that company, if the director has shares but less than 2% of the paid up share capital, either the director himself or combined with other director, if the shareholding is less than 2% of the paid up share capital, then that company no need to enter it in the register. Then other particulars also you have to write it. After that, the entries should be made in chronological order, authenticated by the company secretary. Authenticated means verified by the company secretary whether the details entered into the register are correct or not. The register will be signed by all the directors and it will be placed before the next board meeting. And a director or KMP, within 30 days of their appointment, they have to disclose the particulars. What are all the particulars we are entering into the register? Within 30 days of their appointment, they have to disclose it and it will be entered. The register will be kept at the registered office. All the members inspect the register. They can examine the register during the business hours. It will be preserved by the company secretary. It will be kept under the custody of the company secretary. If a member asks some details from the register, the company should provide the extracts and they can ask the charge also. But the charge will be maximum 10 rupees per page. The register they have to produce at the annual general meeting and all the members can inspect the register. Even proxy they can also see the register. Exceptions. Some contract, no need to enter it into the register. What are all the contract? Purchase, sale, supply of goods, where the total amount is 5 lakh, aggregate in a particular year. Then, if it is done by if it is entered into by a banking company, if a banking company is entering into a contract for collection of bills, then also no need to enter it into the register. Penalty for contravention also they have given. That's all about this section, section number 189. The next section is section number 190, contract of employment with MD or WTD. Here, the contract that you are entering into with MD WTD should be in writing. But if it is not in writing, you have to prepare a memorandum. You have to prepare a memorandum and you have to tell what are all the things that you have agreed. That should be kept at the registered office of the company. All the members should be allowed to view that particular agreement. Penalty for non-compliance they have given, and this will not apply to a private company. This contract with the MDWTD it will be not applicable to a private company. Then section 191. When some special events are happening, some payment made to the director we are restricting it. So now I will explain to you in detail. For example, a company it is carrying on multiple business. In that one business you are going to transfer it to another company. When this event is happening, the directors, if they are receiving any money from the company, from the buyer company, if the directors are receiving any money, that they should receive only after informing it to the shareholders. That only they have given because of one particular thing. Why? For example, this particular division, the value is 100 lakhs. But this company will give a commission to the director. This buying company will give a commission to the director and will try to convince the shareholder, will use the director to convince the shareholder to sell the particular division for 80 lakh, and the 20 lakh is the profit to the company. Out of that, some 2 or 3 lakh will be given to the director. Like that, there can be some arrangement that can happen between the buying company and then the director. So in this case, when a transfer of undertaking is happening, the buying company and then the directors, they should not make any payments between them. If you want to do, you have to inform it to the shareholder. That only they have given here. Transfer of undertaking or transfer of property or transfer of any share. Why they are transferring the share? An offer given to the general shareholder, an offer given by some other body corporate. For example, our company, main company is there. We are having the shareholder in the company. Now another body corporate gives an offer to the shareholder to sell all their shares. If they sell all their shares, what will happen? This company will become a subsidiary company. So this is the main intention of the body corporate. In that case, if an offer is given to the shareholder, that will also be covered under this section. Then offer made with a view to obtain the control of the 1/3 of voting power. So the company is there, shareholders are there, another body corporate is there. It is giving offer to the shareholder not to sell all share, but to sell share worth of 1/3 of the voting power. 1/3 of the voting power alone, the shareholders they have to sell it to the body corporate. That is the contract, that is the offer given by the body corporate. For that also this particular section will be applicable. Then any other offer which is conditional on acceptance, in that offer also this will be applicable. Now I told you that the buying company and then the director, if the buying company makes any payment to the director, first you have to disclose the payment to the shareholder and you have to get the approval of the shareholder in the general meeting. After that only the director can receive the amount that they have given. That provision they have given here. And then if you are getting the compensation for loss of office or compensation for retirement or for retirement or for retirement you are getting some particular payment, then from the transfer of undertaking or from the transfer of shares, from the transfer of the share from the buying company you are getting it, then in that case this procedure will be applicable. After that only, after disclosing to the shareholders, after getting the approval of shareholders in the general meeting, after that only you can receive the payment. Then you have to get the approval of the members in the general meeting. For that you have to prepare a proposal or a resolution. In that proposal, these details should be there. Which director is receiving the amount, how much amount they are getting, why they are getting it, what is the event, when the amount will be paid, date of the board meeting on which that payment is recommended. First you will conduct a board meeting, you will get the approval of the board. After that you will conduct the general meeting, get the approval of the shareholder, then only you can receive the payment. The board meeting on which date the board meeting was held to approve the payment, that also they have to see. These details should be there in the proposal raised in the general meeting. Then the payment should be lawful if it is should be considered lawful if it is properly done as per this procedure. Then section 202 limit, when you are paying compensation for loss of office, you have to follow section number 202. This section when you are following properly, then also this payment will be considered to be lawful. And if the company is in default of public deposit, or the company is in default for redemption of debenture or interest on debenture, or the company is defaulting in the repayment of any liability from a bank or PFI or any other financial institution, or the company is defaulting in payment of income tax dues, VAT dues to the central government, state government or local authority. It has outstanding statutory dues due to the employee or workman. It has not paid the dividend on preference share or not redeemed the preference share properly. Then in that cases, the payment is not allowed. Here the company means the main company, the company in whose control we are having the transfer of whose control we are having the property or division. The main company, if it is a defaulting company, then this payment will not be allowed. After that, now here you are conducting the general meeting, but in that general meeting, for getting the approval of the shareholder, the general meeting is conducted, but quorum is not achieved. Because of that, the meeting was adjourned, and this you cannot take it as an approval to the resolution. Then, if the director is receiving any payment, director is receiving any payment from the buying company in contravention of these provisions, you are violating this provision and getting the amount, then that amount will not be owned by the director. That amount will be supposed to be given to the company. The main company should be the owner of that amount, and then the director will be considered to be holding that amount in trust for the company. The director will be holding the amount, but the true owner of that amount will be the main company only. Penalty for non-compliance, then no effect on the disclosure. If under any other section they are asking you to give any disclosure, that and all there is no restriction imposed by this section on that. That is happening separately under that section, and this is happening separately. There is no restriction imposed by this section. So this is also one more point that you can read it by yourself. The next thing is contracts entered into by a one-person company. When a one-person company is entering into a contract with its only director, only member, only director, between these two entities, there some transaction or contract or arrangement is happening, then Section 193 will be applicable. The contract must be in writing, preferably in writing, but it is recommended to be in writing. If it is not in writing, some memorandum should be prepared, which is listing all the requirement of the contract. And then, if the contract is done in the ordinary course of business, then 193 will not be applicable. This company should inform to the registrar. One-person company should inform to the registrar about this particular contract within a period of 15 days from the date of approval by the board. The board will have only one director, which is the sole member of the one-person company, which is the section number 193. Now we have completed the entire directors chapter. Now, after doing this, if you learned from this video, if you have understood this video, please like this video, share this to your friends and subscribe to the YouTube channel. Your friends also will get benefit from this video, and the notes which I am using here, it will be there in the website. You can download it from there. All the best for your exams.